With inflation reaching new highs, people are flocking to anything that can serve as an inflation hedge. Despite objections, cryptocurrency is frequently regarded as an inflation-resistant asset, and people in favor frequently tout it as an asset class uncorrelated with real-world assets. However, things quickly become complex and difficult when you realize that each cryptocurrency is unique and some are designed to be inflationary. Some investors allegedly flocked to Bitcoin to shield their riches from the effects of rising inflation. But exactly what would that mean? Inflation is a term used in economics to describe the duration when prices increase over time. That's usually because a currency devalues or when one unit of the same monetary system buys less than it used to. If you watch an 80s documentary and see someone selling a burger for 50 cents while the same restaurant charges you $10, that's inflation in action. You may have felt the pinch of inflation when prices increased faster than wages. You're worse off if your $50,000 salary buys 10% fewer goods and services than the previous year. However, if your employer raises your salary to $58,000, you will not have to change your spending habits and will not be affected by inflation. Economists believe that a small amount of inflation is beneficial in keeping people buying and thus stimulating the economy. However, in times of economic crisis, such as the coronavirus pandemic, prices can spiral out of control. Economists disagree on the factors that caused the current surge in inflation, which is measured at around 8.5% in the United States and is the worst in decades. Some blame the Federal Reserve for printing too much cash, which was then used to stimulate the economy and combat the pandemic. Others argue that the Fed is not solely to blame and that the primary issue was supply shortages caused by lockdowns. Inflation and Bitcoin. Crypto supporters believe that allowing central bankers to impact the economy through monetary and fiscal policy, specifically through quantitative easing, will result in disaster. The central banks of Venezuela, Turkey, and Zimbabwe have ruined their corresponding economies through rampant money printing. Crypto advocates frequently claim that because cryptocurrencies like Bitcoin, BTC, are decentralized and cannot be shut down, they are immune to the incompetence of central bankers and governments. Another reason is that Bitcoin issuance is code-controlled. Unlike the Fed, a central bank cannot simply mint as much Bitcoin as it wants. While more Bitcoin enters circulation over time, the Bitcoin protocol determines the rate at which new Bitcoin is issued to miners. The supply is limited, and new coin supplies are expected to run out around the year 2140. And, unlike the Federal Reserve, whose economists must react to market events, the Bitcoin blockchain operates like a well-oiled machine. The protocol reduces the issuance of new Bitcoins by half every 4 years, a phenomenon known as the halving. Because of Bitcoin's fixed supply, some supporters compare it to digital gold, a reference to the yellow metal, another popular inflation-resistant asset. Stores of value assets withstand the ravages of time because they are uncorrelated with other assets and are immune to market interference. But are cryptocurrencies like Bitcoin truly an inflation hedge? The counter-argument to Bitcoin being an inflation-resistant asset is that while the US dollar has declined in value, Bitcoin has far outpaced it, rewarding early investors. However, cryptocurrency is extremely volatile. Recent shareholders who suffered losses when Bitcoin crashed may tell you that their money invested did not outperform rising prices in the short term. Bitcoin has closely tracked the US stock market in recent years, which performs well when the economic system is stimulated and stutters when spending falls, such as during times of high inflation. Bitcoin fell when inflation reached 40-year highs in December 2021. Without the benefit of hindsight, it is difficult to answer whether Bitcoin is a long-term inflation hedge. However, not all cryptocurrencies function in the same way as Bitcoin. Some cryptocurrencies are deflationary, which means that the supply decreases over time in order to increase the coin's value over time, if the demand remained the same. Other cryptocurrencies have volatile supply. For example, the stablecoin Terra USD, UST, mints and destroys tokens based on Luna token swaps to maintain its price stable at $1. And some tokens, such as non-fungible tokens, NFTs, are one of a kind, like a work of fine art. Their value is determined by their rarity. The cryptocurrency has a major underlying issue. It wasn't long ago that many investors saw Bitcoin, BTC, as an ideal inflation hedge. They rationalized that the cryptocurrency was similar to gold, which had long been thought to be a reliable inflation hedge in one important way. Bitcoin was a limited resource, with only 21 million coins permitted to exist. However, this theory no longer has the luster it once had. Here's why Bitcoin's case as a hedge against inflation has imploded. The figures don't lie. Throughout the last decade, inflation has remained low. Meanwhile, Bitcoin has seen significant gains. With inflation rates at historical lows, there was no compelling reason to dismiss the idea that cryptocurrency could serve as a good hedge against inflation. Then came the COVID-19 pandemic, which changed everything. Fearing the economic impact of the pandemic, the federal government responded with unexpected stimulus packages. At the same time, supply chain disruptions caused many businesses to be unable to meet demand. Inflation began to rear its ugly head again after a long hibernation. It was the perfect situation for Bitcoin to demonstrate how effective it could be as an inflation hedge, but it didn't work. No, Bitcoin did not completely implode. However, the cryptocurrency has taken investors on a rollercoaster ride over the last 12 months. It is up, but only by a little more than 20%. Bitcoin is currently nearing its 6-month low. During the same time period, however, the inflation rate has more than quadrupled. The statistics don't lie. Bitcoin is proven to be a terrible inflation hedge. The underlying issue with Bitcoin. Why is Bitcoin not a better inflation hedge? We can easily rule out one possibility. A majority of new digital coins have not been mined. The number of Bitcoins in circulation has increased by less than 1.8% in the last year. The primary underlying issue with Bitcoin is that in order for an asset to be an inflation hedge, investors must believe that it will retain its value as inflation rises. That is unmistakably not the case with Bitcoin. Bitcoin is only worth what investors believe it is. It has no real intrinsic value, unlike stocks. Cryptocurrencies in general are viewed as risky and volatile by investors, and it appears that they are lumping Bitcoin in with every other virtual coin. Over the last 3 months, Bitcoin has dropped roughly the same amount as some altcoins, such as Dogecoin. A hedge in the making? However, don't give up on Bitcoin as an inflation hedge just yet. There is still a chance that the cryptocurrency will be everything that investors hoped it would be. Increased cryptocurrency adoption would be beneficial. The greater Bitcoin's real-world utility, the more justifiable its valuation. At some point, the value of the digital coin may become more stable. If and when this occurs, Bitcoin's fluctuations may become much more inversely related to inflation rates than they are now. The cryptocurrency isn't yet an inflation hedge, but it could be one in the making. Is Bitcoin good against inflation? Because the number of coins is limited to 21 million, Bitcoin is immune to monetary inflation. In contrast to fiat currency, the government decides the money supply through its central reserve within a year and changes the plan for the previous year in the current period. Since the COVID pandemic, the US administration has been printing more money, which has made international headlines while changing the country's economic outlook. Bitcoin's limited supply is obtained through mining. Once every Bitcoin has been mined, the currency is expected to deflate. More cryptocurrencies will be lost as people lose their wallets, implying that the number of Bitcoins in circulation is expected to decrease. In the context of price inflation, Bitcoin is said to be inflationary because the value of the coin is rising, which is higher than what the average person can afford. Satoshi's design is intentionally predictable. As the report emphasizes, it is difficult to predict or know what the global economy will do. What makes matters worse is how volatile the Fed's monetary system can be, with its never-ending rallies and busts. Even though bankers and bureaucrats constantly claim that inflation is only 2% to 2.4%, the rising value of goods and services demonstrates that 2% inflation is a myth. Unlike unpredictable monetary expansion, tightening, and mythical rate of inflation, Bitcoin's annual inflation rate is only 1.77%. Central banks and politicians have always used a 2% target as a guideline, but data from web portals such as shadowstats.com and equipmentradar.com clearly shows that the overall increase in the cost of goods and services is much greater than 2%. Unlike the Fed's system, Bitcoin's annual inflation rate decreases every 4 years during reward halvings. Satoshi's concept of active supply, combined with demand and the reward rate reducing every 4 years, resulted in a predictable economic system with an inflationary rate that no one could control. We can actually predict how much lower Bitcoin's annual inflation rate will be in the future using rough estimates. By 2025, Bitcoin's inflation rate is expected to be less than 1%, and by 2028, the network's annual inflation rate will be 0.4%. Hey everybody, how was today's video? I appreciate you taking the time to watch it. Please share your thoughts in the comments section. Don't forget to subscribe to our channel and keep an eye out on your screens for additional fascinating content. Till then, keep watching and be healthy.